I laughed. I just read that. I just laughed my ass off.
And he nailed the cattle both ways, Ira.
He did.
From 94 cents to 126 and all the way back down again.
Good. You know what? I admire people like that because he doesn't get trapped in the one-way thinking. He sees the change and he adapts to it. Good on you. Okay, I'm coming out to the ranch. I'm gonna, you know what? I need to do some riding and roping. So let's go.
Yeah, he's gonna find some Branch Davidians for you.
Hey, I drove through that part of the country when I stopped in Amarillo. I was probably right by his ranch. I got lost coming out of Dallas.
He said that we're
west. Yeah.
He said we're always welcome. We're always welcome.
Okay. What town does he live by?
What town, Rob? You're in here. Unmute. If you can talk. I don't know if you can talk. When you know that story, what the day that Greenspan raised rates and I was short 18 NASDAQ, big NASDAQ in 03, Rob was long. Rob was long. 6 S&P, January 3rd of 03. That's how we ended up. That was our thing in common. He's north of Abilene.
He's north? Oh, okay. Yeah, I wasn't that close. But if I would have kept going down that one, I think maybe US 10. I don't know. If I would have gone south, I think I would have gone that route. But I turned up north. That's when I stopped in Amarillo for and spent that morning with you guys discussing the.
We were buying gold before the ECB.
That's right.
Right. That's right. That's right. That's when the world made sense. Okay. Let's see. All right, I've got the first question. Instead of bailing out the same corporates like we did, okay, is that are we together here?
Yeah, we're good.
Okay. So, the universal basic income, I don't know. It probably makes sense on the lowest level, but I think that's the same thing. I can't fathom, and it's good to see that they must be. Who's in this room, Mnuchin? Because all of a sudden they came today with the. In fact, I wrote a blog last night. It didn't get published. It'll get published later, but they got to get involved with the emerging markets. And of course, it's had minimal impact, although the ruble is actually up and the peso's well off the bottom that it was on last night. So, I mean, things are, but it's reflecting that there's still a dollar shortage in the global financial system. And when you're the global reserve currency, again, it comes with a privilege in some regards, as the French used to say, but it comes with a burden. And the burden is you're the lender of last resort for the international financial system. And that's something that you have to take on. Okay. But on the universal basic income, I don't know. I've seen a lot of plans. I've read a lot of plans. I'd have to see more about, how they actually put it together, who's most effective. I'm opposed to this $1,000 mail to everybody because I think, and I was opposed to it when George Bush did it. I don't like it. You could do with it as you want. And, I gave mine to charity directly last time, but it would do more good to target it towards the people who are really going to need this. And again, the demand shock that we've discussed for 6 weeks is upon us. It's here, and you're seeing it. And how does it come? It comes with layoffs, and the layoffs are really. You saw the jump in jobless claims this morning. It was even not as. Hold on one second. I just have to respond to this. Hello?
Hello?
You've got your
Yeah.
arrow.
Okay. You're still there. Yeah. Okay. So, let me just. So I'm not I'm not in favor of that. It would do much better if you targeted the people who were most widely affected like this in an immediate way. Because again, a lot of them, and this was the problem of my citing of the demand shock. When the demand shock arises, it's really going to have a huge impact, because as every voice who comes on CNBC has told us for the last 2 years, and that's probably about right. It's the consumer, that's holding up this economy. It's the consumer, because they're 70% and they're holding up. The consumer is doing great. Well, that consumer is going to turn tail right now very fast outside of basic necessities, which of course are difficult to get. I went to 2 supermarkets this morning and couldn't get anything that I wanted, and there was nothing that was that great. Could not get a jar of peanut butter. Could not get, of course, the paper goods. I mean, when you look at it, it's really humbling, because we take things for granted in this country when we always walk to a supermarket and the bins are full and the shelves are stacked, and now they're empty. And it's like I said to the guy at the checkout, who was a very nice guy, when I finally did find something I could buy, he said, yeah, he says, I'm probably as old as you are. He says, this reminds me of the pictures from Russia in the 70s. I said, yeah, that's exactly what I was thinking about. And then we got into talking about rock and roll songs. But I would target this. I would not do a blanket 1,000. Now you could say, well, everybody's entitled to it. Yeah, that's not the argument. And you could do with it as you want. But I would rather give more to those who are really, really, really directly affected by that. And the effect are people who basically live from paycheck to paycheck. And more importantly, it's where the job growth has been. And that's why I didn't understand why people were going, no, I worry more about a supply shock. No, because the jobs have been in restaurants, hotels, airlines, certainly energy. We know how that's going to fare. So all these things, I would like to see a much more directed approach if you're going to do this, if you're going to send out checks, than to do a blanket approach. I know it'll take a lot longer, but I'm not sure in today's computerized world that that's the case. So, and a universal base, I don't know. I'd really have to see specifics as to how it was done. And the problem is once you start it, with everything else in America, once you start something, it's really hard to pull it back. So I'd love to see the best, and the checks go out for the immediacy of the people who are most affected. I hope that are the Fed's, I'm going to the next question. Are the Fed swap line is enough to alleviate the dollar demand? Well, evidently not, because the dollar is up and away again today, which shows you exactly what I've been discussing for weeks, is the lack of liquidity in the global system because of the huge amount of borrowing. The huge amount of borrowing that's taken place throughout the world because of the aggressive policies of the central banks, especially the Fed. And so these countries are borrowed up in dollars. It's been the easiest road, and it's been the most accommodating road, and they need dollars. So we're massively borrowed up in dollars. There's still a shortfall, and it's reflected in the fact that the dollar is not on offer. And this, I would hope this is bothering them. They increased the actual swap lines with the developed world central banks this morning, but I think that was pretty much expected. But the tail will be in the tape. I think today's action in the equity markets, especially, is due to this, because it's the beginning, and at least getting something out there to the places again that it's needed. But because the dollar cannot rally, I mean, because the dollar only rallies, they have to be concerned and be thinking more, because you're still caught in this collateral bind, and it needs to be alleviated. Now, yesterday, we talked for a little bit about the European debt markets, which were showing us something yesterday. So they knew, evidently, as typical in Europe, they always know. I won't just say Europe, but somebody knew, because you started to see that movement yesterday, and now the movement in the Bund Italian, the Bund French has been really dynamic. I mean, there's 80 or 90 basis points moves on the Italian German spread, I think, at one point today, and 25, 30 basis points on the French German at one time. So that was. I think, when you pay attention, you do start to see these things, as we always discuss here. I think it was a very good move by Lagarde, but I think that's just step one. And as I've argued, I think she now has the what they call the Hanseatic League, or the more conservative group of 5 or 6 within the ECB and within the EU. She has them at bay. There's really not much they can do. The Germans cannot threaten anything at this point, because if they were to tighten anything, they would have the finger pointed at them for creating the greater potential for a deflationary spiral throughout the world. So Lagarde, I think, has played this hand phenomenally well, and especially so that she didn't cut. And everybody, cut. What difference would it have made? Even the Swiss, who are at negative 75 on their lending rate, didn't cut rates last night, but they promised that they would make liquidity available, and we know they're very good at that. So,
well, they intervened last night, didn't they, Ira?
A little bit. We'll never know. They're intervening all the time. So when they intervene, that means that they printed some money, or they actually had sold some stock off late in 2019 because the reserves turned down. So that's when the Swiss was, starting to make some moves against the euro. They're very, they try to do it in a very non-intrusive way, if that can be done. But there was definitely some. So we'll have to see. We'll see the next numbers, because they don't tell you on a daily basis or a weekly basis even. You get it monthly, and it's always a month behind anyway.
So we went off the basis of Euro Swiss this morning that was them buying Amazon, Apple, and Microsoft for the first big rally up out of the opening range off that low, which turned out to be a really good trade.
Mm. Yeah, what it was. And you see now here come the S&Ps back, moving back up. So, I mean, we have these things in place, but the dollar is strong across the board, still representing that people are trying to hoard dollars, because they're, fearful of something, even with all these dollars that have been made available. So it really reflects how levered up the system was, and still is. And you're still getting, you are still getting liquidation, and I know you guys have talked about this, because I followed it in the notes and stuff, that, we don't know the damage yet from these massive traders, who have been the darlings of everybody as long as it was pumping up the system. So, but that one we won't know for a while. Hold on one second. Let me go to the next one. If I'm not answering these push back at me. Let's see.
Yeah, and the other thing I was looking at, Ira, was that the yuan's trying to put in ORH quarter and dollar yuan.
Yeah.
So they're just
finally, and yet, again, because they need dollars too, and you can't. There's nothing you can do. But it was interesting that gold yuan actually held that. I mean, nothing holds in the classic sense, but the gold euro and the gold yuan actually held up there pretty good against some interesting support levels. I'm going number 3, Andy. Ira has mentioned the potential weakness in the real estate market. Yes, I have, and I've thought that WeWork was going to be a disaster, and now it seems like SoftBank is in need of some type of financing. It's going to definitely impact the commercial markets. And you see it. Look at the malls. I mean, look at the REITs on some of these. I mean, it's insane how much value they've lost. And those were the havens within the equity markets. You know, the REITs. Oh, I love the REITs. Oh, I love the MLPs. And I know you talk about those too. Again, just like with the gold, when you have to raise capital, or as Dennis Gartman was so fond of saying, when the whorehouse gets raided, even the piano player gets arrested. So, I mean, that's where you're at.
Oh, boy.
So, I mean, that's where we're at. There is a cleansing of the system going on. We just don't know how levered it was. Because supposedly, don't forget, following the great financial crisis of 2008, 2009, the leverage was, supposed to be regulatorily decreased. But, money flowing around the world has lots of ways to play, and we're just finding out. We don't even know. We're at the tip of finding out just how severe the losses have been. So, yes, but I do think, Andy, that's a very good question. The real estate is going to be hanging over us for quite a while, even with these low rates, because especially when it comes to commercial real estate, if you're a questionable borrower, forget about rates being at zero. You're going to still pay, a fairly significant amount of money. It's like going to buy a car if you're a subprime borrower. It can say that, it's a 2% average. Forget about it. You're paying anywhere from 8 to 16%, if not more. So that's what'll happen here, because banks will start to now, as they generally do after they've taken a hit, then they start to tighten up, and they tighten up their standards. They tighten up everything else. So the real estate is going to pay, and WeWork is just, I thought it was the match that lit that off. We had talked about that because they had tied up so much real estate, which resulted in more new buildings coming on because you had to answer that demand call. And now, not so much. And we thought about it then that it was going to be deflationary. If WeWork couldn't get themselves together to do that offering, that it was going to weigh on the commercial real estate market for quite a while. So it's a good question, something that we'll have to watch once we start to sort through the runes. Okay, so Jonathan asked that question too. I think the real estate market is, and especially as people lose their jobs. Now all of a sudden, and I know from talking to my daughter, and I'm sure you got know people too. They'll start, and now, and it's May 1st is usually, being in Chicago, that was usually a time of leases, that and October 1st. So you'll probably have people who become, sharing apartments who weren't planning on sharing apartments. And you're going to have kids going back home, those who bought into the portfolio investment scheme. They're going to be staggering here because they, of course, they were buying at the top. It's not like, I can remember back in 2015, 2000, the S&Ps were at 1,800, 1,850, and I'm just using them as a barometer. Okay. But if you've been buying over the last 2-3 years, this has not been this. You are going to be in a little bit of shock for a while. I know when I opened up my own statement, and I've been one who's been liquidated. I go, oh my God, and I can absorb it far better than most, but you still, it weighs on you and you think about it. So that's going to weigh on the real estate too, because they were hoping that the millennials were finally starting to come out, buy homes. We'll see. Those housing numbers will become very important to see how fast people decide, well, I better wait a little bit. My financial situation isn't as robust as I thought previously, and therefore I'm not ready to take that plunge. But I've all talked to people who have bought some properties in the last 3 weeks, and I can tell you one story in particular where the guy had a bid in, and the guy kept playing with him, coming down by 5 and 10. Finally, he took the bid out, and the realtor called 3 days later. Are you still interested? Well, he bought it for quite a bit less than his original bid, because people get motivated because you start thinking about that you're going to lose. And it's not from that people aren't going to be out looking for the virus because of the fear of the virus, although supposedly people are canceling open houses because of it, but because of their financial situation. I mean, there has been severe damage done here. And what the Fed and the other central banks are doing is merely providing liquidity so all it is a liquidity event rather than a solvency event. We don't want solvency event. That will be a new step forward, and I know that's what people worry about with Boeing, and that could potentially be a solvency event. And I see, and everybody's, people jump to these things. Like this morning, the talk. Yeah, did anybody see that story about Tesla now making ventilators?
Yeah. Yeah, I saw
yeah,
that.
So they ran. So when I heard that, I said, "Wait a minute! I thought the Tesla car was supposed to take your breath away. How can they be making ventilators?" The guy says, "Well, yeah." He said, "I'm a sick man." I say, "You got to have a little humor."
Yeah, the couple interesting things I was looking at this morning. One, I really like that low in the Russell, and and it's really been the regional banks that have led all morning. I mean, Wintrust has been out of control. The KRA's putting an ORH day in. All the they're coming back for all the transport names, and we're just going. And it started out with what I thought was the Swiss buying Amazon, Apple, and Microsoft.
Well, you know what? And it's a good call. And we talked yesterday about those regional banks, because I mean they've gotten decimated. If you look at those stocks and go, man, that's like death. You're looking; those stocks are priced for an absolute total seize up of the U.S. economic system. That's what those stocks. Well, of course they would go they could go lower, but the speed of, so they were telling you how fearful this demand shock was going to be, because as people start losing jobs and people are borrowed up, that's where the pain comes in. That's where the hurt comes in, and they were priced to it. So let's see, if that subsides a little bit, because then you will get I think a fairly robust rally. So that goes to Rob. What do you see as I'm sorry. Somebody asked a question, Andy, again, on which stocks would be best to buy. This is the time you want to be doing your work. Who's gotten beat up? Who's gotten crushed? Do the technicals with it, but say, hey, there's some there's some value out here, and I'm going to find them. And I would first look at
well, I like the fact
yeah, I'm sorry. Look for companies with low debt. Low debt is critical.
I mean, I like the fact that all the MLPs blew up yesterday and everybody had to throw them up on the lows.
Yeah.
And that was the low on the oil. and it just rallied, 30%.
Hey, and I'm going to tell you what, and there's talk out there about the United States supposedly mediating between the Saudis and the Russians. There was a story. Where was that story? Oh, I got it. I have it. Hold on. Because all my eyes and ears, and you guys are part of it, so I do get, there was a story. It was a Bloomberg story, I believe. Let me look. Come on, I know when it was out there. I read it. Did I get rid of it? Because no, I couldn't get rid of it. I apologize. This is. I can't find it, but I know it was out there. There was talk about. Oh, maybe I have it here. Hold on, I may have it different.
Yeah. So, Errol, while you're looking for it, we've got another guy in the room that's out of London who was a follower of our friend for years. A
follower of our friend.
Another 100 Howard.
Oh, okay. Yeah. Well, listen. Then he's bright and he knows what he's talking about because you couldn't help but learn. So that's a compliment. Okay. Yeah. So, and he says.
We've just been talking about the currencies all morning.
Okay.
And we've been looking at Aussie yen, which has had us, it's been since the 80s when you've seen, or even in the mid 90s since you've seen currency moves like this.
The Plaza Accord fib.
Yeah, I know you keep coming. You have to remind me of that frightful week. Let me see. I'm just checking. About Russia, sorry. So, you know what? And again, I think that's another piece of the puzzle. So, in my view, that if the United States would at least make an effort to get rid of those sanctions with the negotiation with Putin, that they would be able to get oil prices up, which, as I talked about yesterday, or 2 day, whatever day, I can't remember. I'm so fatigued from this. It would do well because you have to. Did you see where copper got to overnight? I mean, they just absolutely crashed.
It's crazy.
Mm-hmm.
Yeah. Yep.
Who shorted that yesterday? Who wanted to short that yesterday?
Somebody's bench shorted.
Yeah.
For a big move.
Good on them. Yeah, it's huge.
Somebody was short again here in the room.
Jonathan,
I think that's probably. I think that probably finally woke up the Fed and the Treasury. That take a look at the commodity markets. What are they telling us? Are you, what? Wake up. And I think that had a lot to do with it. Let me see. I'm going to try to find that article, but there is talk about that. What do I see? I'm going to jump to Robert's question. I got as to what is the biggest inhibitor to market stabilization. It's the rush to liquidate because of the vast amount of debt, even as interest rates have gone down. Leverage is a wonderful thing when the market is going your way. Not such a wonderful thing, and people are really fearful of being caught out here. So, I'm very consistent in this for anybody who has followed my work, who's talked, who's been involved in these conversations. I say every crisis begins with debt, and the debt is the issue here. And people are running to try to raise cash. Nothing said it more than Boeing last week. Again, and we talked about it. We talked about it right when it happened.
Oh, did we lose him?
We talked about it right when it. Am I okay? Because I dropped my phone.
Yeah, you're back.
Okay, so we talked about it when they drew down that line of credit, very unexpectedly. They caught everybody, and then it forced everybody else to draw down lines of credit. And everybody else throughout the system, because if they're going, well, such a high quality, AAA U.S. corporation Boeing is worried about this. Everybody's worried about it. Everybody's worried about, looking back, oh God, I'm going to need cash here for this. I'm going to need cash here for that. So I think that's the thing that still plays out and hampers this market more than anything. And that's what they're trying to prevent, but that's what the dollar is telling you too. I mean, they're all tied together. And it's interesting that of all the people that the Fed haven't, well, actually nobody's really been talking, but they should have Richard Clarida out there talking, as long as they're doing these swaps, and they're actually opened up swaps to 9 new countries this morning. You guys know that because I sent that story on right when it broke. So all these things, it's debt. It's Robert. I don't get away from it. That's what it is. It's why you've seen the wild, wacky movements in the equity markets, but also in the bond markets. I mean, last week we were talking. I remember we were on the day that the 10 years went to 30 basis points.
Yes, sir.
It's inexplicable, but it all comes down to debt, and that's what I warn people, and I there's one guy I haven't talked to yet. I'm worried about him because I know it's part of the questions. We're going to get to that in a minute too, because these private equity firms have been very aggressive, packaging out all kinds of loans as they were busy raising money. And I think that there's a lot of people out there who are going to find out that they have, in their efforts again to just generate a higher return than they could get in CDs and T-bills, even in treasuries, they went out on a limb. And those loans, of course, a lot of them were made to companies like SoftBank and real estate, commercial real estate people. I think those loans are going to, again, are forcing people to sell stocks because they're worried. Again, how do you price this stuff? And remember, let's talk about the private equity game, because I know let's get to the exact question. They're so good. Because with the private equity game, their big thing is that they get to they basically set what the value of the underlying asset is. And I'm never in favor of that, because I've learned, I'm almost 67, I've learned through life that if it's not done in a transparent way, I never come out. Never. And I'm pretty financially astute, but I'm always on the wrong end of it. It's one of my problems with Wall Street. I've been on the wall because if they're setting what the value is and they're telling you, oh, here's how we're marking it to book, it never is. Yeah, it's great again when things are going up, but you're not selling when things are going up. It's one of those things, and I'm glad that they're doing this now, because I'm not a big fan of share buybacks. I've never been a fan of share buybacks, and they really were not allowed until the early 1980s, by the way. But my answer to share buybacks was this: if it's such a good thing, why should I sell? Who's selling? In order for you to do buybacks, somebody has to be a willing seller. But if it's such a great thing, why would anybody be selling? So that question still boggles my mind, and I'm glad they're going to come back to deal with it now, because all these firms, a lot of firms did buybacks with borrowed money. So that's even worse.
Thank Reagan.
Yeah, no. I'll tell you who I really, it was that whole movement to shareholders, and so I think they became really a big thing when they started using shares to reward management. Because to me, I always look at these buybacks as that they prevent dilution of a company, because you do all these stock option incentives. And so if you didn't do the share buybacks, the huge amount of incentives that you were giving out to management would eventually become dilutionary to you and me. That's what and I've read a lot of studies about it, because there was one study that was done right after the dot-coms blew up, and really I found interesting, because it was about Dell Computer, and Dell was very aggressive in stock buybacks, and when they looked at the prices that they paid for the stock, the study was, I think it was somebody's PhD dissertation, and it was reduced to an article somewhere that I read, and the amount of money that Dell basically burned up doing stock buybacks was ridiculous. But I like the article because it proved out in a very methodical way things that I had thought about for a long, long time. But there it was. And again, of course, Dell got in trouble, and then the private equity guys wound up with it anyway. So Wall Street. Lars, what do the CBs do with their paper losses? I'm going to answer you the same way Jerome Powell answered me. They have a printing press. They don't take losses. No, I'm not being flipped, by the way. That's the fact. There's no. What's it? They'll just print the money, or if this is what the Germans say, because the Germans maintain that they're on the hook for this. So then it's not. You can eventually print your way out of it, but think about this. If you were on the hook as an American with all the losses and things that they buy, it would become a fiscal event, because the taxing authority would have to raise taxes in order to pay it back, right? Hello?
Yeah, I'm listening.
So they'd have to pay it back. But that's what the principle of MMT, modern monetary theory, is that don't worry about it, because we'll just print our way. And if enough money evaporates, we will just print our way, and you won't absorb any losses, and it won't be inflationary if you act responsibly. Okay, I got Dimitri. You guys can hear me, right? Because I keep screwing with my phone. Dimitri from Russia mentioned well, we hope, I hope we touched on that enough. It should at least stabilize the emerging markets, and once you stabilize them, they'll stop the forced selling of when I say forced selling, they're in a hurry to sell and lock up prices for goods because they need to raise money, and it puts a lot of downward pressure on commodity prices around the world, which becomes that negative feedback loop, which results in a deflationary spiral. So you had to stem that. You have to stem that. Right now, we still haven't done it. So I don't know how much it's going to take.
But you're seeing a couple of signs of it, Ira, in Brazil and EuroCAD with this oil rally.
Oh, Judd, that's a very good point. And look at even who's that, Dimitri? Look at copper; it's even higher on the day. So, and the grains jumped today too. By the way,
right to resistance.
I mean, the wheat's up 30 cents. I'm running through my numbers here. These are phenomenal moves. So, Dimitri, it's a very good question and a very good point, and it's having an impact already. But I think that they'll realize they need more, because this dollar is just. They have to be scratching their heads, going, "Huh? How can this not be impacting the dollar more?" Now, you could say it's because Europe's a disaster anyway, but I'm not of that mindset. And I'm very rarely am I positive on Europe. But
and that's trying to bottom too, Ira. I mean, the Eurostox 50 is trying to put an ORA stay in. The DAX is, all this stuff. So
yeah,
whether it
right.
goes anywhere is another story, I guess.
Yeah, but we shall, as we say, see, because I think they're at least starting to get it, that this is a global phenomenon, and the Fed, whether we like it or not, I know the dual mandate as the world's reserve currency, they are the lender of last resort. And this one, 2008, I think, was much different. This one, because of its ability to be demand shock, although in certain sectors, in real estate, there was certainly a demand shock in 2007, 2008 that bled through so much because so many people's wealth. So the wealth effect was a negative wealth effect because you were destroying the most important vehicle for people's wealth, not just in America, but other places. And so they were all trapped with negative asset values. So this one is different. This one is, again, I've been very upfront about this. This is demand oriented, which is everything that this economy is based on. Let me see what else I can get to. Tackleberry. On top of the dollar shortage, is there a shortage of good collateral? Absolutely, there is. Tackleberry, that's a very good question. There is absolutely a shortage of good collateral. And part of that is because of the central banks, because they have massive balance sheets. And what do they buy? They buy quality paper for the most part. Good. We'll get to this. So yes, so the more that goes on their balance sheet, the more the system actually needs, and especially now when the Treasury was cutting their T-bill offerings because we're coming into tax season and they're pretty lush with cash and not in immediate need of financing. There's a demand for good quality collateral out there. So yes, you're absolutely right, and that's what they're trying to make available to those who are who need it in order to go in and do some borrowing and be able to pledge good collateral. And it's interesting that it's interesting that you bring that up, because there's some stories that were written about the gold market, that gold is collateral. And I know that passed, you can use gold as collateral, but because people were liquidating everything, including their gold, they were foregoing some of that collateral. So there was a lack of collateral to certain elements who needed it. So yes, there's absolutely, and that's why you're seeing some massive dislocations in the funding markets, especially in the T-bill markets. A shortage of T-bills went negative yesterday because demand for them was so great. People were just were willing to take a lot less just to get them for that collateral reason. And those are the things, again, that when all this dust clears, Judd, and listen, why shouldn't you blow your own horn? This room has been on top of this, and people should come here because there's going to be phenomenal opportunities. This market, and we talked about this yesterday, is going to change in a dynamic fashion, because a lot of these vol sellers and people who are crushing the life out of fundamental momentum-driven trades are not going to be seen for a while. They'll come back, because they always come back, because somebody will reinvent it in some way. But that will make the market movements, I think, much more reliable and interesting than they've been. Now, I'm not talking about what we've seen in the last, I would say, 18 months, but the market's complacency. And I'm a big fan of Minsky. So complacency is a dangerous thing. I've maintained that in my blog writings for years and years, that complacency scares me. And when when this room will become a much more important go-to place on a daily basis, because the real ideas will need to be fleshed out, and most people will never get it anywhere else. You're not going to get it in the mass media. You need places like this, and I think it serves a great service, you know. And Judd, I've been reading the testimonies that people have been writing in, so I'm glad to be part of it, because this is what I love. This is
well, you're a big part of it.
Well, let me tell you what. But right now, I am telling you, I am fatigued.
Oh.
I've traded through a lot of crises, really. Hell, when Trump got elected, I was sitting in the office with those guys until 4 a.m. I mean, okay, during Brexit. And let's bring that back for a minute, shall we? I'm going to end on that. The Brits are looking pretty good right now, I think. Nobody is bashing the Brexiters right now because, you know, Europe, as the currency reflects, they have some serious issues, how to resolve them. And the Brits can do a lot better and be much more flexible outside the EU. Now, did they give up a lot? Maybe. We don't know yet, but it's certainly they've been far more aggressive than the rest of Europe. And actually, you know, and the pound's been getting hit. I think the pound, that may be one of those places that we really look to when the smoke starts to clear here, because I think that's I'm not sure what to call, but the pound is been very weak. But it's weak, you know, because they're able to do what they can do, and actually driving the currency lower on a competitive basis once the smoke starts to clear will make Britain and the UK, I think, a positive place to come back to. But I think the same about Mexico, and that'll take time, because I can't believe that the peso is at 25 to the dollar, but that's what happens in these markets. You know what? People are just, you know, sell Mortimer, sell. You know, I don't care about the price, and they're just liquidating long-held assets.
Ira, there's one more question I dropped into your chat.
Yeah. Oh, let me see. Oh.
There you go, Scott.
Hold on.
Scott just said, well, the whole of Europe has closed its borders now, just like the Brits wanted.
That's pretty funny. Hey, you know what? Some people get angry. You got to keep a sense. You know, God forbid I ever lose my sense of humor. You know, it's in the demand explosion. As we want to go, oh yes, that'll come, but I think the answer depends on how long this lasts. Okay, I think they're doing some very smart things. The mortgage moratorium in New York, that's big, because you don't want, you know, first of all, you can't move people out of their homes if they're not meeting their mortgage right away anyway, or they're not paying rent. It's a more arduous process than most people think, which, going back to 2008, when I was doing a lot of television stuff, and I brought this up, in fact, I got into a very heated argument with Meredith Whitney. We don't even hear from her. But here's the thing, you know, people were more, I'm going back to 2008, they did more to protect their credit cards because they needed that to live on. And they weren't worried about their mortgages because they knew it took like 12 to 18 months to get them out. So you protected what you needed to protect in order to survive day to day, knowing that the legal status, and it was, you know, my attorney who taught me that, who's a really good bankruptcy attorney. He says, you can't just move people out. You're not coming to evict people. There's a whole process. And the more people that are undergoing eviction because of systemic, the longer it takes, because the courts are tied up. And in 2008 with those mortgages, the courts actually stopped evicting people because the banks couldn't produce the mortgages because they had all been cut up and pasted into so many different securities.
Yeah, but they were
I knew it was
also,
gonna
every one of those documents, Ira, had defects.
Right. Oh yeah.
They all had
Absolutely.
defects. They all weren't. Not one of them was written without defects.
Show me the note.
Yeah, well, Judd, you may
You know what?
remember a lot of the documents were robo-stamped.
Yeah, they were all,
Yeah, that too.
defects. So that,
But you know, but the banks couldn't even produce them because they'd been cut up and pasted. There was a couple in Cleveland
Right.
Federal District Court with Deutsche Bank. Deutsche Bank was trying to foreclose, and the judge told him, "Get out of here! You don't even have the paper," because they had cut and pasted it as a security, and
Yeah,
they couldn't go and reclaim it because they couldn't find it.
Show me the note. If you were evicted, if you were going through eviction, and your attorney told you to show you the note, they'd have to go find the original one that you signed.
Right.
And if they couldn't,
Right.
you're in that house. There are people in their houses whose homes were foreclosed on still free and clear.
Yeah, they could not produce. So this is going to be different, and I at least applaud them for trying to get out ahead and alleviate some of the pain at the lowest end of the economic ladder. And I'm not talking about the unemployed. I'm talking about people who've worked hard, who work in 2 jobs. And you know what? And listen, I'm telling you, my daughter got furloughed because it's a high-end restaurant, and they're not doing to-go stuff. But I told her she could probably get a job cooking at people's homes if she can get. Well, you know, I was in the supermarkets. I went to 2 supermarkets today. There is fresh produce. There's milk. There's cheese. There's vegetables. All stuff that's perishable is getting there and getting delivered. It's the stuff that isn't. So I told her, I said, yeah, with your pedigree, you could probably go get some gigs cooking at people's homes, you know, as long as you don't have a fever and they test you, and you go get the food and prepare it. I just said, nobody's going out, so I don't know what she's going to do, but they're not paying her.
Problems, Ira. I mean, Susan's off. She took a leave of absence for 2 months because they're going to lay off 25,000 flight attendants.
Yeah, you're right. And this is where the pain is going to be. And look there was somebody who put out Ackman put out the ridiculous, you know, Hilton hotels going to 0. Okay, maybe, you know, the hotels are going to get whacked here just as much because this is where the job creation has been. You know, bartenders, you know, people who really work these jobs and who need to meet. So there's a lot of unknowns. Is there going to be an explosion in demand? Yes. If you can tell me when this ends and when people get a greater sense of sanity. I mean, we're all looking to China. We're looking to Korea, although Korea had another, I guess, burst in the numbers. I haven't seen that for sure. You know, it affects each and one of our lives. And if we stop and look at it, how it does, and just imagine on a systemic basis of how many people are being affected and in a very immediate way. And, you know, one of the laws of economics is when you face this type of uncertainty, you know, this is what Keynes warned about with his paradox of thrift, which is when you're facing uncertainty, you have a tendency to save more money. And the more money that you save makes the feedback loop that much more powerful because your savings are what's needed. They need people spending. So that's the greatest fear. So some of these things where they're trying to halt the immediate impact on people in a negative way on people are good things. And yeah, if this is short-lived, you will get it'll be like, you know, an end of a war because that's how impactful this has been. And I see it we all see it. We see it on the supermarket shelves. We see it and how many people are out at night. Listen, my savior where I'm at here has been the health club, and they closed that today. You know, because most people where I'm at are, you know, in their late 60s, 70s, 80s. Hell, I play golf with people in their 80s who carry their golf bag for 18 holes. I mean, it's pretty impressive. But, it's a pretty robust community, but the health club is closed. They can't keep it open anymore. So, I mean, these are how it's impacting and stemming the flow. And again, that's the demand shock, because now you have people who work in the health club, they're out of work. They weren't planning on being out of work.
Ira, you brought up a good point, and it dovetails with the psychology of financial repression. You know how we've discussed many times that zero interest rates cause people to save more, not less?
Right. Right.
Well, look, the Fed just cut rates basically to zero, and stocks have crashed and are still crashing. When do people get comfortable to spend again, let alone spending just for normal stuff, you know, let alone for going out to movies, restaurants, cruise ships, travel, right? With rates still at zero, because we don't know how long the Fed's going to keep them at zero.
Look, at everybody here who's paid attention to me and read my stuff, one of the most phenomenal things that's going on here is that the gold has been under pressure, because everything that I've talked about literally for 10 years in reference to gold is now taking place. And it's all about central bank credibility and central bank, how they act in a fiat currency world. And it's here. And yet gold is just being tossed asunder and aside like everything else, because it's in liquidation mode. But if everything that Pax just said turns out right, the banks will not jump off of this, okay? They won't. This is a deep commitment that they're making. And they have to have the all clear sign. But what they just revealed to everybody in no uncertain terms, and if Dimitri's on from Russia, we know that Putin is laughing, because the Russians and the Chinese have been busy buying gold. But they've just revealed that there's nothing they will do when it comes to bailing out the creditors in the system. Okay? That's just, so that's what's going on here. Their fear of deflation is the greatest fear of all. They talk about inflation, but they live in drastic fear of deflation. So until they get an all clear from this, they're going to keep the pedal to the metal. Because imagine, let's say that the virus disappeared next week, okay, in a miraculous fashion. What would the central banks do? And it's a reasonable question.
Nothing. They're not going to.
Because first of all, the stock market is not going to rebound like some people think it's going to rebound, because people have been hurt again. You know, and these, you know, these are wounds. I see it on people's faces. I see it on people's faces.
I just had those calls again this morning, Ira, with somebody that didn't do anything with their 401k. They're our age, and they're going to be working till they're 100.
Listen, and Pax raised the right question, because, again, the whole Bernanke portfolio balance channel coupled, and they openly told you this, the financial repression. And again, Vince Reinhardt's wife, Carmen, who has written extensively on financial repression. But we go through this at times, because every policy affects somebody in a good way and a bad way. And the policies for the last 15 years have been all about, 13 years have been all about salvaging debtors. And you're seeing it right now. What is all this commotion about? This is all about softening the blow for people who are in debt. So that's what's going on, and that's going to be left. So I still believe that my thesis on why to own gold, and I'm not a gold bug, but I'm not a fiat currency bug either, as I'm prone to say. I don't fall in love, because I know that banks can destroy currency just as well as they can do other things. And in the fiat currency world, my antenna are really up here. Now we're still in crisis mode, but when the crisis starts to subside and we start to see things in a better light, there's some real questions that we're going to have to ask, and we'll have to see the duration of this. But make no mistakes about it. And you've seen it now in the last 24 hours extensively, and I expect to see more. The central banks fear deflation more than they fear anything else, and they will go to extremes to do it. Believe me, they're dancing right now because copper is a 20-cent range today. But it sure took a long time. You know, I would have gotten, had I really gotten involved in this, I would have been buying copper on the first news of that this morning when they announced opening the swap lines to emerging markets, and when you saw what Europe did last night with a 750 billion bond. Oh, and by the way, for everybody who's on from Europe, they basically, Lagarde, and you have to give her credit because it took a lot of guts, she basically tossed aside the capital key. So now she'll just buy bonds, meaning the ECB, in any way, shape, or thought that they determine. They will not hold to the standard, well, German GDP is 25%, their contribution to the ECB is 25%, 25% of the bonds we're going to buy are Germans. They're not going to adhere to that. So we're already getting fissures in the whole structure of the ECB. So there's going to be a lot to sift through, and I'm telling you, we're blowing our own, but too bad. This is going to become a very important place for discussion, and for anybody who's trading and investing, you need to be here because there are things we've just ripped the whole financial system, apart. We've just ripped it. Everybody's going to have to figure out where they belong and how where they are now in this ecosystem. And you know what? There's a lot of work to be done, but there will be great opportunities because out of all crisis comes great opportunities, and hopefully we'll be able to find them. Let me just see if I can cite that. See if I can find that article yet. Nope. But there is an article. It was on Dow Jones, I guess. So if anybody finds it, send it to Judd. He'll send it to me. It's about the United States intermediating between the Saudis and the Russians. So something to pay attention to for oil triggers.
I saw that. I saw that not long ago.
Oh, you did see it?
Yeah.
Okay. Yeah.
Let me see if I can
Because
find it.
believe me, those sanctions are coming off, and they'd be right to do it. But I just, it's one of those. What do we get? What do we have to negotiate here? So I think that's a very serious issue, and we'll see it play out. But these are the things that we discussed. All right. I hope I answered everybody's questions. If not, we'll have another go at it.
Thanks, Ira. Always appreciate
Yeah.
it.
Okay. Good.
It's great.
Okay. All right.
No doubt.
Okay.
Thank you,
All
Ira.
right.